welcome to this special show on the World Economic Forum's annual meeting here in Davos. On this show, we're going to bring you a whole host of views from very well-renowned economists from across the world and what they think of 2016. You're going to hear from Nobel laureates Christopher Pissarides and Michael Spence, well-known economist Ken Rogoff, the global chief economist of S&P, Paul Sheard, as well as the chief economist of IHS, Narman Bharovich.
Now, the first thing we should say is that there is a lot of uncertainty of what they do because they are not very transparent. You know, decisions come out, we don't know how they do it. What's surprising about China is that they've been growing for so long at such high rates.
Yes.
Not that it's slowing down after 25 years. I mean, it has to slow down at some point, and it's amazing that it took so long, and that's a positive sign. It's a sign that the economy is being managed well.
Whether it is the slowdown in China, which doesn't disappoint you as much, or it is the lack of a long-lasting solution in the Eurozone, what is it going to mean for the global economy? Will the US manage to pull all of us along? Do you believe India has its finally moment in the sun? What do you make of how the rest of the world will be impacted?
I think yes about India, no about the United States.
Okay.
Like you said, I think the United States is still the biggest economy. It's still the driver, especially for Europeans, you know, where we are. But it's not big enough globally now to pull the rest of the world up. I mean, China has become too big, and the other economies have grown. Emerging economies generally are now claiming a bigger share of world output, and they are needed as well to pull the world economy up. As far as India goes, though, I mean, given its population growth, given its the new technologies that are now going in, I think it is a moment that it could seize its opportunities and grow forward. But there's still hard work to do. There's work to do, things that the Chinese have already done. India needs to do in terms of modernizing at least the economic side of the economy, introducing more flexibility into markets, go for freer trade. Those things are needed.
Talk us through what you think is going on and whether markets are overreacting to the news, whether it's from China or crude prices or slowing growth across the globe.
In different places you need different policies, structural reforms, tax policy reforms, fiscal consolidation, and so on. And it wasn't happening, or at least not happening very fast. And so the growth has turned out to be systematically disappointing. Kind of every year the growth forecasts go down. And at some point it seemed to me, and you never know exactly when, the recognition of the lower growth and the effect on corporate earnings and somehow would get reflected in asset prices. And that seems to be what's going on now. In addition, there's a great deal of volatility because there's a lot of uncertainty. There's, especially from outside, people don't see easily and transparently in through to the Chinese economy, which is big and systemically important. And they've made kind of clumsy policy mistakes with respect to the stock markets and to some extent the exchange rate.
Yes.
And the communication has been reasonably ineffective as well. So with all that uncertainty, you have volatility and high-speed capital flows. For the emerging markets generally, you had a huge tailwind with commodity prices and a lot of cheap capital flowing in because of the monetary policies in the developed countries. And then both of those things have reversed commodity prices dramatically, pretty much across the board, producing fiscal stress, headwinds to growth, and so on. And you have volatile capital movements as the Federal Reserve starts to normalize its policy. So it's just a very unusual environment. But I'd say looking forward, the structural underpinnings of sort of sustained kind of resilient growth are really not in place right now. Okay. And it's going to take time to put them in place. So I would not think of this period of slow growth as a temporary phenomenon. It's not permanent, but it's not going to go away in 2016.
Look at what's going on in the world. I think the first 3 weeks of this year have been dominated by headlines that talk of a downward spiral in equity markets everywhere. Are you surprised at what you're seeing happen in the markets?
Well, I can't say I perfectly anticipated it. I'm not surprised that there's renewed concerns about China. I thought that the markets had become way too complacent about what was going on there. On the other hand, people are talking of recession in the United States, recession in Europe. I don't see it in the data. I mean, anything is possible, but we don't see a lot of pre-recession signs in either place. In the U.S., it seems to be doing solidly.
You wrote a paper or a column or an article on how you thought that we hadn't been able to capitalize on this big collapse in crude prices, and that in normal circumstances it would have led to an increase in demand, but that hasn't happened yet.
It's good for India.
Well, yes, it's very good for India. Can you talk us through what forces these are that are preventing us from being able to make the most of this oil price decline, and really what the implications of that are then?
So, I mean, I think there are a few stages of it, because it's declined several times going into this. But to the extent that it represents new supply, it's really hard to tell a story that it's a bad thing for the global economy. It's bad if you're an exporter. But, you know, it's just like if you discovered more oil in India, it's not bad for the global economy. But, of course, if you're an exporter and you're fragile fiscally, you're Venezuela, it's very bad. So I think the speed of the collapse caused concern. But on the whole, that story seems overdone as an explanation of what's going on. I think if you look in the world, there are countries like India which subsidize energy a lot, and instead of passing it through to consumers, not just India, all the emerging markets, China just as much, they've been hurting from the fiscal subsidies, and they're kind of pulling back. So it was sort of not absorbed into the lower deficits. I think as it's gotten lower, more of it's going to get passed through.
What do you make of where the yuan is today? Currency traders tell me they expect another 5% on the downside. Continuous dollar strengthening. What will it mean for emerging market currencies like the rupee, which have been better off than many others?
You have a floating currency in India, and you're very lucky. The Chinese have made a huge mistake. They've done a lot of things right. This one they did not do right. They should have made the currency much more flexible 8 or 10 years ago. Certainly a few years ago, they should have done it from a position of strength. The currency probably needs to sink more than 5%, maybe much more, but then come up. They're in a situation where capital outflows have gotten too big. The capital, there's too much trade, there's too easy to get money out of the country, and it's hard to clamp down on the exchange rate. They're trying to put the genie back in the bottle, stop the capital flows. It's very hard with as much trade as China. So I think that remains a vulnerability. But, you know, again, it's really a transitional problem. They ought to have a more flexible exchange rate. But at 5% depreciation, I don't know what that would solve.
Okay. Is it just the currency, or do you disagree with how the Chinese government and the PBOC have dealt with this rebalancing of their economy in the last few years?
I think the larger problem is their effort to make it seem like nothing's going on and it's all smooth. We were saying 7. Oh, it was 6.9%. We're very disappointed. When you do an epic transition, such as they're doing, it's very hard to have very smooth numbers, not to have a rocky patch, as I've been saying for a long time. So, yeah, I mean, I think the big danger here is that I do think it's slowing down more than they say. I think growth's more likely in the 4 to 5% range, as I've said for a long time. And that's okay when you're rebalancing. But if they panic and then pump a lot of credit in to build more cement plants, more steel plants, more stuff they don't need, then they have a bigger credit default problem down the line. They already are facing a difficult debt overhang, and if they panic, it could get worse.
Would you compare this to the 2008 crisis?
I don't see that at all. I have heard that from some super smart people around
George
here.
Soros last night made that point.
I didn't know that. I have seen that from some super smart people. You know, in the worst case scenario, it might feel like that in China, but they're not as financially integrated as the United States and Europe. I mean, that would be very bad. But no, I don't see it in Europe and the United States. Now, I have to say, as 2008 unfolded, the Europeans thought they were fine.
Yes.
So you never know. I mean, no, but the macro data is not yet showing that. China has some difficult problems to solve. I think it'll be a much bumpier landing than I would say the Chinese economists are trying to project here. But that's okay. I mean, the thing is not to panic and to, adopt policies that cushion things over the longer run. If they do panic, then it could get worse.
India seems to be in a sweeter spot than the rest of the world. Do you buy into that? That's one. And the second part of that question is, the finance minister in India has this difficult choice to make between, sticking to fiscal discipline and maybe diverting some money towards public infrastructure to help kickstart parts of the economy, as well as to relieve some rural stress. Which way should he go?
Well, I think infrastructure spending is essential. I mean, India's future depends on having infrastructure. There are many high-return projects. However, I full well understand that, if you go through many states or many cities, they're just incredible political problems. It's very parallel to the United States. We don't have high-speed rail between Boston and New York because of right-of-way problems across the states. It's very similar trying to do anything in India. So it's not just about the budget. It's not just about managing money. It's about, trying to get a system where you can move forward. You live in Mumbai, I believe,
I do, yes.
and it took ages to build that airport, right?
Yes.
And India needs to improve on that. It needs to find a way that it can build infrastructure to have a more inclusive society.